One of our best trading weeks for the whole year. I mean, everybody in the room is trading live. It was the best trading week of the whole year last week, the last 2 weeks. Everybody, all of the guys here that you see them with, most of them that are in the room with me, and knock on wood. It was, I guess, one of the best trading weeks of the year. Anyway, so let's get started. Like I was saying to Joe, all of you, most of you were with me in the room. Last week was a fantastic trading week. We had a big, nice follow-throughs until Friday, and we all anticipated there will be some short covering rally coming into Friday, as you remember, and that's why we closed all the yen pairs right before the New York session. And some of you, the ones that didn't take it live, I asked you to take the short covering rally that came into the pound yen and that came into the this was the short covering rally that came in. This is what the one that happened on Friday, and you can see the move from 118. This is where we covered our shorts right there at 119, and then you had the move all the way up, and this is so far is the continuation of the short covering rally. So we were quite fortunate taking it on the way down and then covered and reversed. So with that, as expected, as always, whenever there is a long weekend or there is a holidays, usually, and there is an extensive move in the Japanese yen, usually we get this kind of short covering. Nobody wants to go into the session, into the holidays with a large short position, specifically in the yen, because as I explained to you in the room, they usually take advantage of the market being thin, and they begin to buy, if you will, or sell the Japanese yen so that they can affect the market. The other thing that happened over the week, also the last couple of days or today, the Australian, the Royal Bank of Australia also cut the interest rate by 25 basis points. There has been rumors that it will cut it further than the 25. There were talks about 50 basis points, but the consensus from the report is that they are looking at eventually to reach the 50 basis point, but they're doing it incrementally, and they only cut 25 basis points. So again, that confirms the bias that we had in the Aussie dollar, and you can see we're right today with regards to the Aussie, and I'm starting with the Aussie because it's reacting right now to the economic news, which is the cut of the interest rate. This is what you are looking at. This is the reaction to the news. Cutting interest rate is primarily negative to the currency. It is assumed that it is a negative to the currency, and what you see right here is that before going into the news, we broke below the 96.64, which is the major structural point, and then out of fear of whatever happens, we had this short covering, which was yesterday, which is nothing, and then today, this what happened. The market is, as you can see, we have this big kind of inverted tail right there as a reaction to the news. So whatever spike that we had here is nothing more than people just trying to take some insurance before the news comes out. But once the news came out, you can see that the market is beginning to slide. And right there, what we have in the Australian dollar is a sell signal. This is a major sell signal because we have bad news coming into the market, which is cutting the interest rate. And what we have right here is what we call bad action, which is there is no counter move to the opposite side. There is no short covering rally. There is no one second, some people are there is no short covering rally. There is no buying coming into the market because they assume that the news has now been discounted. So what's happening right now is the market is behaving in the same way as we expect it to react, whether the news has come out or not. So the market is now declining, and we are now trading at 97.23, which is below the 2-day high, the 3-day high, and the 4-day high. So that is basically a major sell signal, or we should anticipate now continuous weakness in the Aussie dollar. Having said that, let's go and look at the pound, the US dollar, which is again the key for the in the last couple of days, and that move, as you can see in the we broke last week the 82.45, which that is the beginning now of a bull leg in the US dollar. The dollar now has broken above all the structural points. I mean, that was the first structural point at 80.44. Then we had a push up, which was the 82.04. We came down, we created a higher low, and now we have broken above the 80.40. So that is the beginning of what you can consider a bull leg in the US dollar to the upside, and we should see continuation. At least probably we should be looking somewhere towards the 89 level. This move in the US dollar, that is, as I said, the beginning of a bull leg, and we can only look at continuation. Having it, we should not begin to even consider any pullback here other than a buying opportunity, as long as the US dollar is above the 82.45. So right now this pullback is nothing more than a buying opportunity for us, and we should be looking to continue to buy the US dollar. And we looked at the Australian, so we can see that the Australian again is weak and it's reacted negatively to the news. The next one we're going to look at is the euro, because that's the currency of the day. That is the one that is reacting to all the news. This is the one that is the focus on the events that's happening in Europe. And like what you see here is basically, this is a classic holiday trade. I mean, what you see right in front of you is a classic holiday trade. We were all short until Friday. We had a slight pullback, which is the short covering again. And you will see when we look at the spot cash, everything went exactly to the structure points, it came exactly to the significant points, and then it began giving you the snapback. So we had every opportunity to stay into the trade, and we had every opportunity to get out of the trade when the prices were triggered. And that day that you see yesterday here, the green bar, this is the market was closed in Europe or in England at the bank holiday. So again, the market was thin, and today, as you can see, we are resuming the move to the downside. The bearish sentiment for the euro still exists, and basically that's what we have to do. We should be staying short or bearish the euro. If you look at the next currency, which is the Swiss franc, this is a classic. We are now trading at the 103. The momentum, our momentum low, which is the 104.30. When we broke below the 104.30, we broke it with momentum to the downside. And now we are, the last few days, we came back to the 104, which was basically today's high. I mean, if you look at today's high, is 104.43. So we did test and came back and test that structure point, that significant, that is a structure point, that is a big momentum low at 104.43. We did actually trade above it. Now, as you recall, guys, we were talking that above the structure points and below the structure points, there is a specific typical behavior that we should anticipate. Below the structure point, there are sell orders. So below my momentum here, there is sell orders. So they're sitting right there. And you can see, once it triggered the sell orders, you got your pay. You got the follow through to the downside because it traded below those sell orders and it triggered the sell orders. Now, once that happens, what happen? The next step is that above the sell orders, above now that momentum point, now you should have the stops or the buy stops, and you're looking now for a behavior. So in the sell stop, you had the confirmation that this is weakness, and you got the capitulation to the downside. When we came above the 104.30 today, there is no follow through. So this means there is no buying sitting. There is nobody that is stepping up to the plate to buy above the 104.30. And what does that mean? That behavior confirms to us that the bias is still to the downside. And this is what you always want to see. You want to see a momentum low, capitulation, that confirms, it comes back and retests this low with no follow through to the upside, and then it begins to resume its decline in the direction of trend. This makes that currency or whatever that instrument extremely bearish, and you should be looking to continue to sell it. So this is one of the classics, images or pictures that you want to keep in your mind when you're trading. This is a very weak pair now, or a very weak currency that you want to be shorting. The next one we're going to look at is the British pound, and pretty much it is the same. This is what we were looking at. This is the big coiling that we had in the British pound. The original direction is to the downside. We have broken below our major structure that we had, which is the 157.82 based upon the spot, and that was the trade from last week. And now we're trading at 153.49, and pretty much it didn't even give us 1 day of short covering. The only day we had this snapback on Friday, which again we took it with the pound yen just to capture like a day trade, if you will. to the upside in the pound yen. But Monday, this thing is not going nowhere, and today you're getting your continuation to the downside. So the pound is extremely weak. And we should be looking at selling the pound. So the next one we want to look at is, before I tie them up together, all of them, this is the Japanese yen, and our structure point is the 125.70. That was our buying point from the beginning of last week, and you can see the image here, guys, is what you look here is, if you look at the that chart, you can see that it broke above the structure. You had a push to the upside. It's the upside of the Swiss. Then it came back to the structure. It held. It held, and now it is stopping at, and we got the push up. So now we have a confirmation that the trend is now still to the upside, and all what we had this pullback, and this is a vacation trade or a holiday trade. So being that kind of a holiday trade, our bias is still should be to the upside. We should be looking at buying the Japanese yen and the yen, as I said. So the two currencies that we need to be looking at buying them is the Japanese yen, because it's above the structure and it is above the it came back and tested. So Paul, just this is for you, just because I know you were your password did not work. This is the upside image of the Swiss franc. It came back up to the structure point, which is the 125.70. When it broke above it, we had the buying coming in. When it sold off, or right here again, it came back and tested. So it broke above it, it came back and tested, and now it is breaking to the upside. So now we have a confirmation that the trend in the Japanese is up, the Japanese yen is up. And if you look at this chart, that goes without saying that technically, if you look at all the currencies that we're looking at, this by far is the strongest of all currencies. The Japanese yen by far is the strongest currency in the world today. Just looking at those different charts. So just take a look. This is the Japanese yen. Look at the US dollar. The US dollar is still, if you're looking at the big picture, is still in a bear market, and now we are beginning to get out. This is right here. That is the beginning of the bull leg. So it is just coming out of the bear market, but technically it's weak. If you look at the Canadian dollar, it is pretty much beginning to weaken, and we have a structure failure to the downside. And if you look at the Swiss franc, you got your trend change, you got your bear market, your momentum low, and now it is broken below the momentum with a confirmation. So the Swiss now is getting into a bear market. So the only two, I'm showing you these charts so that you can identify what is the strongest currency in the world. And as I said to you, just by looking at the chart of the Japanese yen, you can see that by far, this is in a bull market starting from 2002. This is way in a bull market. We're sitting now at 127. The high is 130. This is a bull market as it is, and therefore the Japanese yen technically or fundamentally today is the strongest currency. So having said that, let me go back and do the Canadian and then we'll wrap it up. This is the Canadian, and as you can see here, we are beginning. We have a kind of an interesting structure in the Canadian dollar, which is a little bit different than normal, and therefore it is kind of unique, and it's good to be aware of it. Up till this point, and I'm just compressing the chart for you, up till this point here, you can see that we have been in a bull market. This is our momentum high, our original momentum high. This here is we got two highs pretty much. We can combine them if I'm doing a weekly chart or something. But again, these both are, this one here gave us a small structure failure, so I'm going to assume that this one is the one that is the more profound that I have to keep in mind. And we did come, and right here, that will be our structure point for this move, for this wave. And now we have another failure to make another high over here. So what I'm trying to show you here is that we're getting into a top being formed. It hasn't broken to the downside yet. It hasn't begun to give us the indications of a bear market. Our bear market in the Canadian will begin on a trade below the 9,500, and the actual definite one when we can going to scream that we are in a bear market in the Canadian is when it trades below the 93.73. So we are now beginning to roll over, if you will, and we began to get small structure failures, one structure failure and then the second, and all this in this rolling. So the key now is a test of the 9,500. We are now trading at 96.12, and if we break the 9,500, we should begin to get a capitulation, and the final test or the beginning of the bear market in the Canadian dollar would be a trade below the 93.73. So it is moving pretty much the same as the US dollar, but take a look here. This is another telltale we have to keep in mind with regards to the Canadian, and as a show of its weakness. See what's happening the last 3 days? A decline, a pause, and now weakness. Okay? If I put the chart of the US dollar, you'll see that the last 2 days, this thing has been weak. Whether it's profit taking, whether it's because of the holidays, but that weakness that you see in the dollar, the same weakness that you see the 2-day declines in the Japanese yen, has zero effect on the Canadian. That weakness in the dollar, the weakness in the did not even give this a budge to go higher. It didn't even move up. They didn't even buy it. They still continued to sell it. The same thing with the pound. The weakness in the dollar didn't translate into any buying in the pound. The weakness in the dollar did not translate into any real buying in the Australian dollar. So this means the CAD is something we need to short. It also means that the pound is something that we need to short, because the weakness in the dollar was not met by strength in the Canadian, the pound, nor the Aussie. The only strength, that something that moved up in the last couple of days, was the euro, and that was probably short covering, but now it's beginning to resume. So the euro is the next one to follow, and the last one is basically the Swiss. So the Swiss chart is identical to the chart of the euro. You can't really tell the difference between them, the way it looks the last couple of days. See, this is your euro and this is your Swiss. They're pretty much the same, but they're all giving the sell signals. So if we're going to set the hierarchy, we have seen that the CAD, the pound, the Aussie, as a reaction to this weakness in the dollar, we saw no strength in them. So we're going to be, again, as we did from last week, we're going to be buying the dollar and buying the yen. These are the two that we're going to be looking at them. But the Canadian is extremely weak because it didn't give us any move to the upside. The pound also now is pretty weak. The Aussie, there is no, the news came out and now it's beginning to move to the downside. So the Aussie is also weak. Then we had the short covering in the euro, which keeps it as is weak, and of course the same thing with the Swiss. So it is the dollar first with the CAD and the pound, and then the Aussie, and then the euro and the Swiss. So these are the structure. The Japanese yen is pretty much the same as we're going to be going the Japanese yen, short the CAD yen, short the pound yen, short the Aussie yen, short the euro yen, and short the Swiss yen. Okay? So this is how we're going to, we're going to plan our trades for the next week. We're going to be long the dollar CAD, we're going to be short the pound dollar, short the pound, the Aussie dollar, short the euro Aussie dollar, and long the dollar Swiss. And with regards to the yen, we're going to be short the CAD yen, short the pound yen, short the Aussie yen, short the euro yen, and short the Swiss yen. All right, so that's it. Let me save the recording, and if anybody has any question,